You're 60 years old with $500,000 saved up in retirement accounts and you want to retire, but you don't know how much you can spend. I've got an answer for you today. My name is Justin Hodges. This is Chasing Financial Freedom. I'm a financial planner that works with clients all over the country. Typically, they are baby boomers, also a good amount of millennials socked in there in between because I like generational wealth and working with all those folks. But today, we're talking about you. You're 60 years old. You're tired of work. You're ready to submit your papers to retire, and you have questions on Social Security. I'm going to help answer a couple of those today. And remember, these are in the most generic way. Everyone's situation is pretty much 100% different of each other, including the state you live in, the tax brackets that you're currently in, or in the you're in based on your state, of course, your cost of living in said state, and your own personal spending habits typically are going to all pull those things in that direction. But I'll get you a general number today as well. All right, so Social Security, we'll start there. You can claim that somewhere in the range of 62 through 70. So you have at least a couple years to wait, to bridge at least. Medicare, you cannot claim until you're 65. This is a big one. A lot of you guys want to retire when you're 60. Maybe you have enough assets to do so and you're frugal enough to do so based on your account distributions and your social. But medical is a big expense. I've seen it pushing higher than $1,000, $1,500 a month each. If you're buying it on the marketplace, if it's not covered through some kind of retirement through work, of course. So that is a big cost, essentially. But today we're talking more about income. So assuming you have made about $80,000 a year indexed for inflation throughout your career, your monthly Social Security benefit will be about $1,500 to $1,700 a month. If you made more money, great. That just means it increases. If you want to see your actual numbers, create a profile at ssa.gov. That is the Social Security Administration's website. And you can pull your own earnings from there and get a real life number, not these generic ones I'm spitting out to you. So again, that's ssa.gov. Or you can stop into your local office or give them a call too, or seek out a financial planner like myself, and we can help you really dive into these more. So Social Security, about $1,500 to $1,700 a month when you're 62. Remember, you can't claim until then. That's a good starting target. There's lots of different strategies and reasonings and ways to claim your social. I'll do another video highlighting all of those options. But most importantly, discuss your situation with a professional. That really helps typically to get you a good amount, a good retirement date essentially set for yourself. Okay, now the fun part. You have a $500,000 portfolio. This can be a mix of your employer retirement plan, so 401ks, TSPs, 403bs. Maybe you have some stuff on the side as well too, IRAs, Roth, brokerage accounts, and so on. You've done a really good job getting up to that $500,000 mark. That's when retirement does become more realistic at that point. Anything above it, and so what that means in income on the back end. And we're going to use the safe withdrawal rate of about 4% a year. What that does, that accounts for some inflation typically. It accounts for some volatility over the long term as well. Because remember, $500,000 is not going to stay $500,000 and it's not going to earn the same amount every single year. If you already have that amount saved, you know that there are ups and downs in the markets. And that's something that is going to exist for your entire retirement. But a $500,000 account at a 4% withdrawal per year gets you about $20,000 a year, which breaks into $1,600 a month. And remember, this is probably taxable because a lot of you probably have traditional pre-tax money within your employer plans. So you need to account for that when it comes to Fed and state taxes. Social Security is taxed at the federal level. Most states do not tax it, but some do. So again, where you retire to, which state does matter, or what area you live in does matter when it comes to your tax planning. Now let's take these two things. You're 62 years old. I'm going to make you work 2 more years. You got $500,000 in your retirement account. We're going to claim your social at 62. That's about $1,500 a month. Your portfolio gives us about the same thing, about $1,600 a month. So we're looking at a grand total before taxes of our low 3,000s per month for you to retire on. Some people can do this. Typically, your home's paid off. Consumer debts are paid off. Anything else hanging out there usually paid off too as well. So your cost of living does go down a bit. You're going to travel a lot when you first retire. You are going to spend some of this and enjoy it. what happens, what I see is some of your spending actually tapers off once you're in your 70s, 80s, just because of typically health reasons or energy levels or whatnot. So you're going to spend a lot of your retirement money in those first, in your 60s essentially, and that's okay. And you should enjoy what you put away, honestly. But try really, really hard to stick to that safe withdrawal rate. It's back tested, pretty far. It is not guaranteed though. So the best thing you can do is rely on your Social Security. Keep your obligations below that, just in case anything happens to the rest of it. Of course, you want to the Social Security Administration's, it has issues, but it is backed by the U.S. government. So it's one of the safer bets out there as far as fixed income goes. All right. Bonus points. If you have a pension or anything else, that only helps this. If you have rental property income, that only helps this. If you have royalties, business partnerships, etc., that only helps these numbers. My name is Justin Hodges. This is Chasing Financial Freedom. If you are 60 with $500,000 in retirement, it is time to talk to a financial planner or financial advisor out there, either locally or one like myself.